Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Hey, Mark, Happy New Year and welcome to Digital Currents. Mark, how are your holidays?
Happy New Year. Great holidays. I hope you did too. We're almost, we're black and blue today. Maybe that's because things are a little bit beat up and a little, and we'll get to that. And just as a pre, I had to wear blue today instead of green because with the orange pants, we didn't want anyone to think I was rooting for Miami. So I have the Bitcoin whale sock game on today because the whales have gone deep, right? We haven't seen them for a while. There's not as much activity on the Bitcoin blockchain, some outflows from the ETF. So we'll talk all about that. But look, I will congratulate Miami on beating Ole Miss, although I have to say I was rooting for Trinidad. I like that guy.
Yeah.
And I was rooting for the coach, who was abandoned by the idiot who I won't even mention by name, who I hate. So I was, but I wasn't sad that the SEC lost again. So that was good. But
well, it's good to hear Mark, that you peeked a little bit into the college football play because I know we have some thoughts about it, but it has been a great playoff in terms of the storylines there. So I'm glad that you got a wind of some of them. And it's funny that old Lane is still the bad boy of college football, even though he's not in the CFP.
No, and it's interesting because I swore I wasn't going to watch because they slighted my team, and I still think we would have beat every team I've seen play so far. Although I think it would have been a good game with Miami. Miami's fine; they're good. But I think everybody else. I mean, Alabama horrible, Oklahoma horrible. So I wasn't going to watch, but I kind of didn't watch. I watched with one eye, so I was working on my slides for my. This is the time of year I'm getting ready for my Big Ten surprises around the world. So I was working on that, but I did watch with one eye, and there was some good stuff. There's some good stuff.
We'll say, Mark, that even though Notre Dame is not involved this year, the state of Indiana is well represented.
Yes, tonight's a big night.
Go all the way.
Tonight's and it's interesting. We're recording this on January 9th, which is Tricky Dick Day. Tricky Dick Nixon. This is his birthday. Also happens to be my wife's birthday, so that's the important thing. And yesterday was my son's birthday, so and the King's birthday. So I have to buy a lot of presents between Christmas and the first week of January. But it's interesting to talk about Richard Nixon in the sense that he arguably is kind of why we have the sign back here and why Bitcoin's so important and why gold has been kind of doing what it's been doing. Because he's the one that really untethered fiat and put us on this path toward I won't call it ruin, because if you're at the top, like if you're in the top 1% or 0.1%, you kind of love Richard Nixon, right? You love the fact that your assets are appreciating super fast because the currency is being devalued. And, it's interesting to watch our current president kind of channel some Nixon-esque moves with his, ordering people to cut interest rates, even though GDP growth is going to come in, they think now over 5% in Q4. No one's ever cut rates with GDP growth that fast. I mean, you just don't do it. But the devaluation must continue. And I guess we're just jealous that we don't look like Venezuela. Everybody's like, oh, Venezuelan stocks, they're up so much. Like, you realize no one's making any money because the currency is going down like 99% a day at the same time because they have no assets. And so much to talk about, but
yeah. And maybe that would be a good transition, Mark, as we kind of maybe feel the impacts in our markets on the Dunroe doctrine. And as we kind of look at, we had a little bit of a bump where we touched 94. I know you and I probably had a belief maybe we can go all the way back to six figures again. We've kind of cooled back into the 90s. Mark, there's a belief that, maybe if things align, and they will have to align because there's still a lot of uncertainty left in the world, there could be a path over the next, you call it, Mark, somewhere between 2 and 10 years, there could be an increase in supply of oil, which may curb some of the inflation concerns, thereby leading towards more risk on assets like Bitcoin. That is an argument about why you're seeing some of that growth. But Mark, what is your reaction to some of this new year activity? Bitcoin has kind of popped a little bit, but has reset. What kind of things are you looking at now?
Look, I think Bitcoin is I will argue. I mean, we have talked about this, and doesn't make me popular. And it started with the 10 surprises last year, where I said, look, I don't want to be the skunk at the garden party, but I don't believe the 4-year cycle is dead. And again, it's not a 4-year cycle. It's a 3-year, 11-month cycle. It has to do with the number of blocks in the chain. And so, December 2017, November 2021, October 2025 are going to be these peaks. And then we're going to have 360 days of crypto winter. And I believe we're in that. And the difference is, because we didn't go so high above fair value this time, we don't have to go as far below fair value. And so what's interesting to me is in getting ready to do the surprises this year, you got to start with consensus, because what a surprise is, it's not really a prediction. Like, I don't think I'm some great forecaster. All a surprise is you find out what consensus is. And then you say, okay, well, if the opposite of consensus happens, how would you play that? And if everyone thinks something and something else happens, you can actually usually make a lot of money. It doesn't happen that often. In fact, it's about a little better than 50-50 chance. And if you look at last year, we had 6 right, 5 wrong, and that means consensus was right a little less than half the time. That kind of makes sense. Long story short is, trying to come up with this year, I said, well, what's consensus? There's very little consensus on Bitcoin this year. You have polar opposites. You have a whole group of people who are like, going to the moon, we're going to 250 by then. Now, these are the same people that said we were going to 250 last year. So they're just rolling their forecast ahead a year. And, Tom Lee, and I have nothing against Tom Lee. I mean, he's, getting beat up in the press rate lately, but he did that, and Tim Draper did it, and a whole bunch of people did it. And that's fine. It's kind of like people who said there'd be a recession in 25, who are now like, oh, I meant 26. Like, well, but you said in 24 and 23 and 22 too. So, okay. So there's that group. There's the really super extreme group. And I can't remember what the guy's name is, but he made some prediction like 3 years ago that came true. And so now everybody thinks he's a pun. I'm like one and done is not really. But anyway, he said we're going to 444,000. Like, I don't see that at all. Then there's, on the other extreme, there's a group that's saying, well, we're in this bear market, we're in the crypto winter, and so there's going to be a flush, and so we're going to 30. I'm like, well, where'd you get 30 from, right? Like where'd you get 30 from? Oh, well, that's just double the last one, the last trough at 15. I'm like, well, but why? I mean, we went up twice as high at 126 versus 69. Like, okay, but that's those numbers are irrelevant. What's relevant is market value, right? I mean, a fair value. And so we went to 69, but fair value was only 32. So to fall to 15, 50% of fair value, 50% of fair value today is 45. Now that's a lot less than people would like to think can happen. I actually don't think we're going down 50%. I think, we fell 30-ish, 32, 33 from 126 to like 80. So could we go lower? Sure. Yeah. So everyone's been. Now the funny part is, X, last year I tried asking ChatGPT,
oh boy,
what is the consensus of all these different asset classes, and make me a graphic. And it was horrific. I mean, it was so bad. I mean, words that didn't make sense and numbers that didn't. But it was, it made something from a prompt, but it was horrible. So this year I tried again. And the first thing it gave me, again, was just horrible. You couldn't even read most of the words. And like it had gold, saying gold was positive, but then it said gold was 2,400. I'm like, gold's like 4,400. So I said, try again. And it gave me something that was at least visually attractive, but still didn't even jive with what it had given me in text. And I pounded a couple more times and I got something usable. But the funny one is it said, for Bitcoin, it said maybe 100K question mark. Okay, that's fine. But volatility, like, okay, volatility around 100, but we're not at 100. So, but it's just, so I'm struggling with what is consensus. What feels like more logical to me is there's a lot of activity at this fair value range of 90 to 91. And so every time we kind of get to that, we can get a little bit above it. Like I say, we hit 94, almost 95 on Sunday night. But then we crashed right back down. And I'm worried that if we give up the bottom end of that range, we've been between 80 and 92, 93 for, maybe 2.5 months. If we break through that bottom range, just something happens, you get a bunch of liquidations or you get some sort of event, and what's that event going to be? Could be anything, right? Could be, do we go to war with Iran, which is the new, like, oh, we got to spend $1.5 trillion on defense. Like last year, you were saying we need to cut the defense budget. Now all of a sudden, like, so what was crazy is Lockheed Martin went down 7% in like less than a day on some announcement that Trump made on something. And then literally like 4 hours later, he says, oh, I think the defense budget should be 1.5 trillion. And it went up more than 7% and was right. And like, that's not like a penny stock.
Wow.
Right. I mean, this is a, tens of billions of dollars of market cap company.
Mark, I mean, the amount of reaction here, that's what they would say about our industry, right? So kind of returning to your point about the fact of is this cycle over? A couple of key stats that are worth kind of digging into a little bit. Last week we saw 1.2 billion in inflows, and I love this one, Mark. So on Monday, everybody's presumably, in the full swing of things, coming back from their holidays. Yep. That was the biggest day for ETFs since October. So all the VCs were back, all the bankers were back, almost 700 million in that day. And the other stat that I think is fascinating, so we kind of hit a new number. We love talking about records. We eclipsed on the ETF 2 trillion in cumulative trading volume. And the nice thing here to kind of support the evidence behind your belief and some of mine as well as others that, this time we're going to have a cycle, but maybe it might be less severe, is that with that milestone of getting to 2 trillion, the time it took to go from 1 to 2 was about half the time that it took to get to 1. So what does this mean? Kind of the law of large numbers working in interesting ways is once you get off zero, Mark, you're just having the power of compounding and really showing that this can be a risk on risk off asset, which ties back to this belief that if the economy strengthens, you have this ability to turn to alts, to continue having growth. But then also, Mark, and I will sound slightly like I'm contradicting myself, in a market that also has some turmoil about potential upheaval and war and other challenges, you'll also look to other assets. And we'll quote what happened with Larry to close last year. Remember when he said there were two certain things, there was Bitcoin and gold as the two safe havens for
safe havens, yeah.
So you're seeing that kind of play out as well in the market. And that's catapulted by Morgan Stanley. The Morgan Stanley planning to launch its own crypto ETF, ushering in 50 million new customers. These were the guys that were supposedly never going to do it, Mark. And
oh my gosh. I mean, that is such a crazy turnaround, right? From no, you can't even allow your customers, even if they ask you to buy it, to buy it. Now, I say it wasn't as extreme as Merrill Lynch, who was like, well, if you made your money in crypto, we won't take you as a client. I'm like, well, that's just stupid. But I mean, not the first stupid thing they've done, but plenty of stupid. But here's the funny thing. So one of the things that broke, and we talked about this a bunch last year, was there had been this very tight correlation between money supply growth globally and Bitcoin prices and gold prices.
Right.
And gold prices did just what it was supposed to do last year, went up a lot because money supply was going up and we were devaluing the fiat around the world. But Bitcoin for the first 6 months was great. And then it did this.
Yeah.
And there's been this big alligator jaw that's been created between global M2 keeps making new highs. China just announced a massive stimulus package. You know, most people have no idea. Chinese equities did twice as well as US equities last year. They're blowing it out of the water again so far this year. And that's because China's growing faster. They're stimulating more. They're printing even more money. They make the Fed look like amateurs in terms of money supply creation.
Wow.
So you got that on the positive side. You've got, you know, outgoing Fed chair and supposedly the new Fed chair. The only way you're going to get the Fed chair is if you promise Trump you're going to cut rates. So we're going to get more rate cuts. And now he's ordering the, you know, Treasury or the agencies to buy mortgages, to mortgage-backed securities. So we're going to have liquidity creation. Now that is counterbalanced somewhat, and perhaps this is part of the reason that we haven't seen Bitcoin rally. It's counterbalanced a little bit by what's happening in Japan, which is Japanese rates are literally going parabolic, and the Japanese Japanese yen carry trade is unwinding a little bit because you used to be able to borrow in yen, buy other assets, including Bitcoin, and make a bunch of money. Well, at zero interest rates, that's a great trade. At 2-3%, it's starting to be less of a good trade. So what's happened in Japan is we got to watch that. The other thing is this issue of what we just saw on Monday, right? Is at the end of every month, we get these pukes. Well, why are we getting these pukes? Well, it's because people are short the future and long the spot, okay? And over the course of the month, the futures price drops to the spot price. Well, then they have to unwind that at the end of the month and start over on the first day of the new month. So technically Friday was the first day, but no one was working. So really it rolled over to Monday, the 5th. And so bang, lots of new demand. And we get this big run up. But then what happens, well, then they got to put short on. So the short futures come on, and what you saw was the futures activity, CME activity collapsed at the end of the year because everybody had made all their money. And so if that spoofing keeps happening, right, there's this artificial cap put on prices because, you know, the people who are quote unquote buying all the ETF are shorting the future against it to arbitrage the spread. That's not net new money. What we need is net new money, and Morgan Stanley and Vanguard and others could provide that if people actually allocate, you know, the 2, 3, 4%. Like Bank of America said, you think about this. Bank of America said the average client should have 4% in Bitcoin.
I like it.
I mean, this is a bank that said no way, no how over my dead body kind of language 2 years ago, now saying 4%. So net new money's coming, but I think the problem is in the short run, is that enough upward thrust to get over the downward cap from the big dog shorting it? I don't think so in the short run.
Yeah. Now that makes all the sense in the world, Mark, and it points to what may happen at the end of this month, where you're seeing a bunch of contracts circling around that 100K mark as we got very close. So, expect some movement, right to close the month and start in February. But Mark, we must get to the big news. All was quiet in the house. Not a creature was stirring except for Groq. And on Christmas Eve, there was news that dropped our way about some big growth potential for not just Morgan Creek, but the industry, where we spoke about a big, let's call it licensing deal plus talent acquisition into Nvidia. So this will be the largest deal to date. Nvidia acquiring employees over at Groq. Yes, our Groq, not the Elon Groq. That's going to be ushering them in to the next phase, Mark. And, I think this is such a cool development. I'm being honest, I did not see this happening at this point, but nonetheless, that's what makes it all the sweeter when you get that Christmas gift you were not expecting. But
look, I mean, this was pretty shocking, right? So, we've talked about Groq, and this is Groq, right. The maker of TPUs, tensor processing units, and LPUs, language processing units. Former Google guys came out, started this company. Chamath is involved, and we got involved. And long story short is, look, the Santa Claus rally for the third year in a row in the stock market didn't happen. It's interesting, right? Everybody talks about the Santa Claus rally, and didn't happen for the third year in a row. I think a lot of that has to do with the change in timing of how markets work around, mutual funds have to do all their selling in October now instead of December. So the January effect that used to happen doesn't happen anymore. And there's now this mid-November spike. It's not really a December spike anymore. And then there's the dash to trash in January, which is all the stuff that people sold for tax loss harvesting. They buy back 30 days later in January. So we're seeing that. And you're seeing that with the Bitcoin treasury companies. But Groq is interesting in that, Santa came early to the Morgan Creekers, cottages. And, we thought Groq was a good company. We did. But we didn't, to your point, we didn't see Nvidia shelling out, $20 billion cash. Interesting, cash. For this company. Now, I will argue that it was a defensive scramble, like panic buy, which is why the number's so high, why it happened, kind of without anybody thinking it was going to happen. And I still think it all goes back to Google, right? I mean, originally Jonathan and the team came out of Google, and Google announced in December that they trained Gemini's latest version only on TPUs. And I think Jensen said, what the hell? I dominate training. It's GPUs, not TPUs. Well, shit. Okay, maybe I got to get some TPUs. So, okay, there are two companies, Cerebras and Groq, who have working, TPU production, and Google. They're not going to buy it from Google. So I think that they had to do this. They were forced, which is kind of interesting.
Yeah. And I think it's also, part of this idea that I thought was kind of curious, but also something that we have been talking about for a long time, about just the insular nature of AI and spending and buying. Because, what they are proposing here, and this is likely to become finalized. I don't see any reason why it wouldn't be. But the idea here is for a non-exclusive licensing deal. So this means that Nvidia, what we've spoken about many times, it's very difficult for these large companies to change course. As think about them as these big aircraft carriers. They can't really nimble like they're an IndyCar, right? So they have to acquire these promising startups that can usher in the new era. And they recognize that the GPU is not going to be around forever. It already is not the only chip in town when it comes to this kind of a business model. When we're speaking about the TPU or others. So what they'll do here is they say, you know what, we're actually going to have the team on board to continue working on this internally. We're not going to split focus, but then we're also going to add revenue to this product that we're also going to sell in the future. So it helps us and our stock price, but then it also helps the market, because now you have like the big boys really putting their stamp of validation on what, in our opinion, is just going to become another market standard as you look for AI inference and what that means for the continuation of this technology. So definitely huge and exciting news, and one that really supports our thesis, Mark. To give us a little bit of shine here is that, when we identified this from the beginning in the definitive acquisition, we spotted the talent and we recognized that, blockchain and AI were going to be a thing. So they were doing analytics in one company, using blockchain. Groq had some interest in that, both in the talent and this idea of melding the technologies. And then once that value gets extracted, Sunny grows into the company. Then now Nvidia recognizes, hey, you know what? This chip growth is going to be a really big deal, and we need to figure out another way to have different kinds of chips. But we can't just do this internally. So then our fun forward thesis is that these chip differentiation will continue to expand and grow, and that the hyperscaler is going to be a big part of this acquisition spree. We had some success with IPOs, yes, but we were predicting all along that M&A would really pick up to justify these valuations of the companies and the stock prices. And here we are. I don't think that we're done, Mark. I think there's going to be more of these in 2026, but then again, I'm an optimistic person. So
I think the optimism is completely warranted, in the sense that the innovation is accelerating, and it's logical in the sense that, I love thinking about it. My first computer, right, that I bought literally from Michael Dell, right? I sent the money to his dorm room at University of Texas. He sold me this computer. I should have kept it as a collector's item, but I didn't. But it literally took 3 minutes to boot up. I mean, think about waiting 3 minutes for anything, but it just, and it was best in class at the time. And then I remember trying to upgrade the RAM, where you had to unscrew the back and take it off, and you had to put in these special mittens, and you had to, and so all of this was cutting edge at the time, right? I was a little tech nerd, and, reading PC Magazine and all this stuff. But the short version is that technology was world beating compared to what we were replacing, pen and paper, but it was still pretty bad. And then you get this building on top of that, right? When you get broadband. Well, now broadband plus compute makes information ubiquitous, and you get not a linear, right? Not a linear, but an exponential growth. And, Sir Isaac Newton talked about this. It's like, I'm not even that smart, right? I stand on the shoulders of giants. I'm like, no, you're really pretty smart, actually. But it is true, right? If you're standing on better technology, like just think about a hammer and chisel, right? The first chisel, probably made out of stone as opposed to iron, trying to, so you had to find a harder rock than the rock you were trying to chisel. Pretty tough. Now I marvel, actually, I'm a segue into something interesting. So you see these medieval castles and cathedrals with these beautiful windows, and you're like, those were built by guys with hand tools? Really? Now, so the reason I say it that way is I'm reading this book, and I don't read very much, but actually I'm reading this book called The Three Body Problem. And it's written by a Chinese writer, translated into English. And it's extraordinary to me how everything this guy wrote about, which has to do with this idea that maybe there are other civilizations that have come and gone in the past, and there are other things in the universe. No, it's amazing. No, it's an amazingly, incredibly well-written book. But the interesting thing to me is I'm doing it from the English language, and he's doing it from Chinese. And you'd say, well, it's totally different. Totally the same. Totally the same things. Totally the same concerns. And it's a really interesting thing. But this whole point of once you had a chisel that was made out of iron, that was better. And then you had robotic, hydraulic chisels. Like we've all seen that big machine that breaks up concrete, in the roads. That's a lot easier than getting out there with the hammer and chisel. So we can improve, but we've talked about this too. CPUs, sequentially words, okay? GPUs, parallel words and pictures, but still two-dimensional. Well, the brain is three-dimensional. Matrices, TPUs are three-dimensional. Well, then you're going to get to fourth dimension, which is 3 dimensions plus time, which we kind of have a little bit with time stamping. But the bottom line is we're going to keep having innovation. And then we're going to have innovation, which we've talked about, from electrons to photons. And light and the ability to do calculations with light is a little bit mind-numbing and mind-boggling. But then you get into quantum, which is kind of, well, what is that? I mean, if you can be two states at one time, which kind of makes my head hurt. So the innovation is just going to keep coming, and it's going to come faster. Now, the commercialization of it is still tricky. But then if you support all of it with money creation, now it gets really interesting, because if you're basically providing a lot of cash to people to think big thoughts and do things, and this is where AI, people are like, well, it's going to destroy everything and it's going to kill all the jobs. I'm like, well, no, it's going to make people smarter and better, because we get to now spend less time writing regular code and more time thinking about what we need to advance to the next level of code. Or what do we need to tweak a TPU into whatever the next thing is, I guess UPU or VPU, or I guess we have VPUs, but WPUs or XPUs. And then do we start over like with the generations? We go Gen X, Gen Y, Gen Z, Gen A. So we're going to get to APUs later.
Yeah, but on that idea, Mark, of starting over for the chart of the week, and we'll turn to our listeners for mine. We do this also with video, so folks can see if we've been deep faked, what is the Bitcoin stock gain reveal, if we're matching, and of course, the picture worth a million words with the chart of the week. And what we are thinking about now is maybe doing some company spotlights and kind of going a little bit more in depth, where we kind of mirror both the quant and the qualitative side and figure out, what's the real story there. And so what better place to start, Mark, than with the portfolio company near and dear to us, Coinbase, and kind of seeing what is the latest and greatest there. Any securities analysis starts with just some of the basics, right? What are we looking at in earnings per share and revenue versus earnings? And, when we put some of these numbers up here, I think it's, tells a story. I'm very curious to see what happens in Q4 when you have some different marks on our markets. But I'm setting this up, Mark, so that we can start unpeeling the onion here, as Coinbase is trying to make a very deliberate change in strategy, right? So they're trying to become the exchange, the everything exchange. And so what does that mean? It's this new idea where, we're moving in a world where you've said this many times. You asked folks that are over 35 who their broker is, and they say Robinhood, and that's if they can even give a response. They might not even know what that term really means. But then, of course, at another generation, we're looking at some of the more traditional players. We spoke about Morgan Stanley earlier, that's now offering the Bitcoin ETF and a Solana ETF. So now going backwards with these guys that are digitally native first, they recognize that they have a really big window of opportunity to start offering other goods and services. And so to your idea of, everything kind of coming backwards here, this reminds me a lot of Amazon selling physical books in bookstores, where first they go digital and then they come back. But Mark, I wanted to throw this idea to you and kind of What do you make of some of these numbers? What do you make about this change in strategy where now you're going to be offering equities, derivatives, and other traditional financial instruments on a crypto exchange?
Yeah, look, I think there's a bunch of points that need to be made here. One is, you can see the trend on the right hand side. The blue bars, keep rising in terms of revenue. So the revenue growth at this company is very, very robust because they are dominant in crypto exchanges, but they are also increasing in these other areas like trading tokenized securities or tokenized real world assets, or ultimately another company is doing a similar strategy, a land and expand strategy, is SoFi, right? SoFi started by saying, okay, we're going to get people to refinance their student loans. Well, now that we got you and you have a login, well, we could show you a credit card, or we could show you, other financial services. And it's becoming kind of a little club, right? Like the Amex for Gen Z. So I think the same thing is true here, in that if you ask the average DGen, like I say, what is a broker? And I'd say DGen affectionately. Like I consider myself a DGen, even though I'm old and no one would ever consider me one. But I don't mean degenerate like it was derogatory, but rather just young and willing to try new things and go to new places. If you ask them who's your broker, they're like, what is a broker? I mean, I don't have a broker. And yeah, I have a Robinhood account, or I have a Coinbase account, and having an account where you can trade things. And now they're going to go into, I also have, a prediction markets, issue or gambling problem maybe, where that to me is one of the great rebrands of all time. To go from gambling to prediction markets, I mean, come on. And it's a whole nother, rabbit hole I don't really want to go down, how that might be a deliberate ploy to destroy a whole generation of people by making them, addicted to this thing that is, financially draining, right? I mean, gambling is, the odds are not ever in your favor, shall we say, the inverse Hunger Games. Actually the same as Hunger Games. The odds are not in your favor. So don't go there. But it's different with a Coinbase, because this is your savings tool, right? You start with Bitcoin, the apex asset. And now people will say, well, but Coinbase is just a shitcoin casino and they have all these other things. Sure. Right. And Bitcoin purists don't like Ethereum. They don't like Solana. They don't like Dogecoin. Now, I don't like Dogecoin either. In fact, I'm a big proponent of drop the E, let's go to dog, right? If you're going to do a meme coin, do it on the right chain, right? Do it on Bitcoin. So I get that people don't like what these guys are doing, but Brian's got this great vision of saying digitally native folks are going to need a place where they can store safely and securely their digital assets. Not everybody wants to deal with seed phrases and custody. And I tell the story all the time. My dad owns Bitcoin. And people say, no, he doesn't. No, he doesn't. He doesn't hold his own keys. You're right. He doesn't. He has a Coinbase account. But you tell my dad that he doesn't own Bitcoin, he'll say, bullshit, I own Bitcoin. I mean, of course I own Bitcoin. And to me, that's it's a waste of time argument. It is factually correct that, self-custody is superior in terms of command and control. But, I have a bunch of stock at my brokerage account. And no, it's not in my name. Technically, it's in the brokerage firm's name, but I have an IOU that works, 99.999% of the time. And yeah, I have to plan for that 0.0001%, but I don't worry about it. And I think the same thing is true here. Could something bad happen at a place like Coinbase or Kraken or other exchange? Sure. But at the end of the day, they spend a lot of money on security, probably more than the average individual. You get rid of the $5 wrench risk, right? I mean, if you don't hold your keys, then you can't, have to give them up. And there are lots of increasing, unfortunately, examples of this where a bearer asset, if you have it and someone invades your home and they take it from you, now they could say, well, give me the keys to your Coinbase account. Well, you could still do that, but there are protocols and protections that they might not be able to get it. So I don't know. It's kind of like, why don't you keep all your money, your physical currency, in a safe in your house? Because that's risky. Mm-hmm. Why do you put it in the bank? Because that's safe. Well, but it's not your money then. I know, but it's safer. So that's the first part that I take away here. The second part is the trend inside Coinbase toward service fees and fee-based revenue as opposed to just transaction revenue. That's a big deal. Things like staking, things like financial assets. Like I did, we thankfully had some returns from our fund one and at Morgan Creek. And, we gave investors the choice that you could take your distributions in cash or Bitcoin. And I took all mine in kind in Bitcoin. And, I just, rather than self-custody it, I have a Coinbase account because we're investors. And so I put it there. And I got a very nice email over the holidays saying they wanted to introduce me to their asset management person. Like, thank you, but I'm in the business. I'm okay, but thank you for offering. So clearly they have an advantage, right? They see people's value, how much they have, and they can say, oh, well, we could have, some ways to help you, right? Let us sell you some more financial services. Great business model. And especially for someone who's not in the business, wonderful business model. Like I love the fact that, there was a time when I used to bank with Bank of America and I had a personal banker and she was very helpful. She made things very easy. And then Bank of America said, well, that's too expensive. We're not going to have those anymore. And then I switched banks because it was having that. And now I have a pretty good banking relationship with little old Truist. But long story short, I think Coinbase is playing the long game. They've been playing it really, really well. People think it's this casino. They think it's this, transaction-oriented business. But what they're becoming, essentially, is one of the trusted brands of the digital age. And that is an extremely good place to be, given the direction we believe at Morgan Creek Digital, it's in the name, where the world's going.
Yeah. And I think, Mark, as you may have seen in this screen share, the banks are not so happy about this strategy. Gee, I wonder why. Maybe somebody's coming after their turf, right? Bank of America has upgraded to buy here for neutral. So now they're kind of like leaning in begrudgingly, by the skin of their teeth. And then Goldman is now upgrading as well. And these are the guys that have some sort of favorability towards the crypto angle here. Mark, what do you say about how somebody like a Robinhood, who's already been doing this strategy, how do they fare? But they kind of started in the reverse, right? So they started by trading stocks and then they moved into crypto. So there's definitely a market here of folks that are digitally savvy, whether it's crypto. I think this is a great idea because let's say if, my Bitcoin has a really good day, I may want to continue and park those gains somewhere else in another adjacent stock. Maybe I want a DAT, or maybe I want to go to a blockchain, an AI company like Figure. And when they are not doing as well, maybe I want to move to something else. But, this strategy's, as you mentioned, already been done. How does this kind of compete, help or hurt with just an incumbent like Robinhood?
I think you're exactly right. I think Robinhood, eToro, any of these kind of trading first, security first platforms designed again for young people. And it's a really interesting strategy because people will poo-poo it, right? The big dogs will poo-poo it saying, well, you don't have any money, right? Young people don't have any money. That was Vanguard's whole thing, right? Vanguard was like, yeah, we're going to piss off all the young people by saying you can't buy digital assets, but we have all the old people and they have all the money. That's true today. And it's true maybe even for the next 10 or 15 or 20 years. But all of that money, right, that's $39 trillion, I think, the baby boomers own today. It's all going to the next generation. I mean, some of it will go to philanthropy and stuff, but bottom line is that's all going to get transferred. I mean, as much as we would like to live forever, it's just not going to happen. So the idea of building a loyal customer base with products and services that appeal to the user, the right user base, like old people, right? They like paper statements and they like, security and safety and multiple, thing. They don't want a gamified approach like Robinhood. Now, I can argue on the other side that maybe the gamification piece, like, Robinhood having one button, 10 times levered options trading strategies, maybe that's not the best thing in the world because, 85% of options expire worthless. So the people who make the money are the people writing the options like Ken Griffin, and Ken Griffin knows what you're trading already because he's paying for your order flow. So probably trying to beat Ken is not a good strategy. And so gamifying that, it makes a lot of money for Robinhood. It probably doesn't make as much money for the customer. But so other than that, the eToro thing where you can copy trade, like if I think you're a great trader X, I can hit one button and I can copy your portfolio. That's amazing because the average person actually is not a very good trader. There are some good traders. And in the old days, you used to have to pay a hedge fund manager 2 and 20 or more to get their trading acumen. Now with one button for free, you can copy great traders who are demonstrably great because it's in the public domain what they've done. Now, will they be great in the future? There's some interesting data on this that says there is some serial autocorrelation for traders. But anyway, so it's I think the world is shifting this way. The digitally native brands are going back up. So when we started this business back in 2017, our thesis was blockchain and digital assets were going to revolutionize financial services. We came out of the financial services business, and therefore we thought we could make some money on doing that. And what we really thought would happen is there'd be a lot of innovation, and then the old guard, the Goldmans and the Bank of Americas and the Merrills, et cetera, would just buy up and bring that tech inside. And then what we realized is either their egos are too big or the tech debt is too big, or they want to do what incumbents do and just fight the trend. They weren't going to do it. And in fact, they were going to fight it and make it hard on companies like BlockFi and others. So now what you had is the emergence of brands. Like Coinbase is a brand. Kraken is a brand. eToro is a brand. Right. Robinhood is a brand. And I think that is interesting because there was a time where Goldman probably should have just bought Coinbase, or Bank of America should have just bought Coinbase. And they might not have been for sale, but they might have. But I don't think they are.
Yeah, every company is for sale until they get that nice fancy price, and they have to present that to the board, and then a conversation.
Yeah, that's true. It's true. But, maybe they're still.
That's probably a good point to cut there, Mark. And I think you're going to see more of this copycat strategy because it's creating value, right? If you already are demonstrating the hard work of making good product and have now wrapped it with better service, why wouldn't your customers want to continue working with you in an extended capacity? So that makes perfect sense to me. And I'm happy to be back from our somewhat extended break, and happy to be back with our Digital Currents audience. We will do this again next week, and we'll always have to remind our listeners, rate, review, subscribe. Thank you so much, and happy 2026 to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.